back. It's time for our most favorite segment on Mondays. To brighten up our Mondays, Nigel D'Souza is here to give us his Midcap Mania for the day. Nigel, go ahead.
Well, Sonia, this stock has been on an absolute tear in the last 1 month or so. In fact, the stock is up close to around 24%. But I'm just looking at it, and in the past year, the stock was at similar around that 1,000-odd level just in the last 1 year. So you just pull up a wider time, you'll see that, in fact, it was at the similar level. It's up only around 10% in the last 1 month. It's running along. But let's talk about the fundamentals of the company. Cotton prices, we know, are up between 20 to around 25% itself from the 2016 lows. But Ambika cotton, why is it different? Is because it uses Supima cotton. I was just looking through it. This is a premium cotton in comparison to the Egyptian cotton that we normally talk about. So how it helps them, their yarn realizations as well are higher because the kind of cotton they're using, that Supima cotton, is of a superior quality as well. The company manufactures quality cotton yarn for hosiery as well as for weaving. Close to 60% of their revenue is coming from exports. And also the current capacity is at around 108,000 spindles. That's in terms of their spinning capacity. They have a couple of expansion plans as well that are likely to come on stream. So let's pull up the expansion plans. They're looking to set up around 30,000 spindles approximately. But however, all the clearances haven't yet come. But most of this capex is already in the price because they have indicated, as per the annual report, that they're looking at around 130 crores. And in fact, most of that is going to be funded via internal accruals. That's one part of it. The second part is that, in fact, they're looking at getting into knitting business as well. That's a forward integration. The total capex for that project was only around 8.5 crores. But what I understand is that the asset turn is nearly around 4 times. So that will add nearly around 30 to around 35 crores once operational. And the management says it's going to be operational in this month itself. So it should start reflecting from Q4 onwards for the entire quarter. And remember, all this capacity addition is being done from internal accruals. But what really impressed me was the way they've reduced their debt over the last few years. They had a 250 crore debt approximately. That's now down to around 15 crores. Net debt I'm talking about. So that's quite good as well when you have a capacity of around 1,800,000 spindles approximately. Looking at the financials then, they have delivered a CAGR of around 14% in the last few years. That's on revenues. But the last few years, they've done absolutely nothing. That's because, in fact, the cotton prices, they've been fairly volatile. Moving to the profitability as well, they've done a CAGR of around 17% in the last 6 years. So both these two data points, they're not very, very impressive. But what impresses in terms of a yarn producer is that the margins have been fairly stable, from around 20 to around 30%. I was talking to Mangalam as well as Naveen, and they were telling me at some point of time, even the best yarn producers, they see suddenly a 5-10% margin number. That's not really happened even in the toughest times if you take a look at the margin picture. The other positive that you can look at is that, in fact, Ambika, in terms of their average days receivable, it's only around 14 days. And remember, they're exporting 60% of their revenues. So that number as well could appear a tad bit inflated. While, in fact, you look at Arvind as well as Vardhaman, that, in fact, is higher than both these two. Promoter holding, there always calls for attention. Promoter holding at around 49%. And two big funds over there do hold stake. Mr. Murthy as well as Professor Bakshi, they have some stake. And remember, so that will be a longer-term investment that we're seeing in there as well. Finally, the MD's remuneration always is taken note of, particularly in these textile companies. And the MD and the chairman had slashed off 2% of the profitability is normally what he takes. That has been slashed off on 28 December 2015. So that shows you that, in fact, the management is totally into the business. And what that resulted in is that an interim dividend came in at around 15 rupees. That's far higher than what we have seen over the last few years. So it's not a recommendation. Think about it. The stock has been on a big run. But those are just the fundamental analysis. Cotton prices, by the way, have come off the high point as well. Back to you.